welcome to the channel Get Rich. Today the company we are going to look into is HDFC AMC. So before looking into the company, let's first have a look at mutual fund industry as a whole. So let's have a look at mutual fund AUM as a percentage of GDP for different countries. Before going into that, so what is AUM? So AUM is asset under management. It is a total value of all investment managed by the mutual fund. AUM can be at a scheme level or a plan level. For a mutual fund as a whole, AUM represents value of total investments across all schemes. So if you are having a look at US, they have around 100% mutual fund asset under management as a percentage of GDP. For France, it's 78%. For Canada, it's 62%. For world as an average, it's almost 60%. For Brazil, it's almost 60%. For UK, it's 58%. For South Africa, it's almost 50%. Look at that. For India, it's just 15%. So we have huge growth lies ahead. So if you have a look at the asset under management of the mutual fund industry in India, it has grown at a CAGR of 15.5% over the past 5 years, with the equity AUM growing at a CAGR of 17.3%, even faster. Rising awareness about benefits of investing in equity markets, growing popularity of ways of investing such as systematic investment plan are some of the factors contributing to the increased participation of domestic individual investors in the Indian mutual fund industry. If you are having a look at the monthly average asset under management of individual investors in the industry, it has reached 12.9 lakh crore in March 2020 and has recorded a growth of 18.2% since March 2015. The number of individual folios have increased from 4.14 crore to 8.93 crore in this period. Net inflows into the industry over the past 5 fiscal years were 9.46 lakh crore, of which 6.47 lakh crore have been in equity oriented schemes. On the other hand, fixed income products including liquid funds have seen increased popularity amongst corporate as well as retail and high net worth individuals. The monthly SIP flows grew 2.8 times from April 2016 to 8,641 crore in March 2020. The number of SIP transactions processed in March 2020 was 3.12 crore as compared to 1.01 crore in April 2016. SIPs offer the benefit of regular investing coupled with benefits of rupee cost averaging and are typically sticky long-term inflows and lend visibility and predictability of AUM growth. So in this period, Indian equity markets achieved a healthy balance between the domestic institutional investors, largely mutual funds, and foreign portfolio investors, FPIs, thereby significantly reducing the skew towards reliance on FPI inflows, lending more stability to the Indian markets. So if you are having a look at the equity AUM from 2016 to 2020, so it grew from 4.26 lakh crore to 8.26 lakh crore. The debt AUM grown from 5.84 lakh crore to 7.76 lakh crore. Liquid AUM 1.96 lakh crore to 4.15 lakh crore. But as a whole, AUM it grown from 12.33 lakh crore to 22.26 crore. Look at the growth, it's 5.5% CAGR over the past 5 years. So then let's have a look at Indian 10-year yield. So if you look at this graph from March 2019 to March 2020, it is reducing from 7.5% to almost 6% now. So why is it relevant here? So if the yield of 10-year yield of India it is reducing, more and more investors will put their money into equity schemes. Since equity is more profitable than debt schemes, the AMC companies will benefit from this. So in the future, I expect more and more people will get involved in the equity schemes. So then let's have a look at HDFC AMC. HDFC AMC is India's most profitable mutual fund manager, leading in actively managed equity-oriented asset under management. Their total mutual fund AUM as on March 31st, 2020 is almost 3.2 lakh crore, spans across a comprehensive suite of investment products across asset classes and scheme categories to meet the various investment objectives of their large customer base of 56 lakh individuals and institutions. They also provide portfolio management and separately managed account services. These services cater to high net worth individuals, family offices, domestic corporates, trust, provident funds, and domestic and global institutions. Their principal shareholders are Housing Development Finance Corporation Limited (HDFC) and Standard Life Investments. They own 52.7% and 26.9% stake respectively. So HDFC is almost known to everybody. So it is incorporated in 1977 as a specialized mortgage finance company and is today a financial conglomerate with a dominant presence in housing finance, banking, life and non-life insurance, asset management, real estate funds and educational finance. So if you are having a look at Standard Life Investments, so it is a subsidiary of Standard Life Aberdeen PLC Group. It is one of the world's largest investment companies. Standard Life Aberdeen PLC Group was created in 2017 from the merger of Standard Life PLC and Aberdeen Asset Management PLC. So it is operating under the brand Aberdeen Standard Investments. The investment arm manages $645 billion of assets, making it the largest active manager in the UK and one of the largest in Europe. They have a presence in over 40 locations, including 24 investment centers across the Americas, Asia, the Middle East, and Australia. They have huge, big shareholders, so that's a huge positive for the company. And if you are having a look at their 1 year profit after tax, it almost 1262 crores, and they have 24 lakh live accounts. They have 223 branches. They are servicing almost 98% pin code service across India. They have 1176 employees. They have 65,000 plus distribution partners. Also, if you look at their quarterly average AUM, they manage around 3.75 trillion rupees asset under management. Of them, equity oriented is 39% and non-equity oriented is 61%. If you have a look at their closing AUM, they manage around 3.5 trillion rupees and equity oriented is 41% and non-equity oriented is 59%. If we have a look at their schemes, so they have 23 schemes in equity oriented, 90 schemes in debt oriented, 2 schemes in liquid and 7 schemes in others. So they are doing a very good job. Let's have a look at AUM. So this is the total AUM. So their quarterly average total AUM from September 2019 to September 2020, it's almost nil. So they have a 0% year-over-year growth. It's almost the same. And if you are having a look at their market share, their total market share, they had around 14.7% market share in 2019, September 2019, and in June 2020 it's 14.5%, and in September 2020 it almost reduced to 13.6%. So they are losing market share. That is something to note. I will come back to it in the later stage. So if you are having a look at the closing AUM, it almost decreased by 3% year over year. And if you are having a look at the market share, it reduced from 14.9% to 13.2%. It is for the total AUM. So then let's have a look at their equity AUM. What happened to their equity AUM? So the equity AUM quarterly average, it reduced 11% from September 2019 to September 2020. It reduced 11%. If you are having a look at their market share, it reduced from 16.1% in September 2019 to 14.1% in September 2020. So they had a huge loss in market share in equity AUM. So, and then if you are having a look at the closing AUM, it reduced 14% year over year, and their market share reduced from 15.8% in September 2019 to 13.6% in September 2020. So they are losing their market share in equity AUM. And then if you are having a look at their debt scheme, it increased by 15% quarterly average. And if you have a look at their market share, it is almost the same, 13.4% in September 2019 and 13.4% in September 2020. And also the closing AUM, it also remained almost the same. Their market share is between 13.6% and it remained the same at 13.6%. If you are having a look at their liquid AUM, it reduced by 4%, and their closing AUM reduced by 13%. And then if you are having a look at their market share, it increased from 18.5% to 18.7%. So their liquid schemes, their market share is increased from 18.5% to 18.7%, and their market share of closing AUM, it reduced from 22.1% in September 2019 to 18% in September 2020. And then if you are having a look at their asset under management over the years, how it is increased. So if you have a look at their asset under management, so in March 2016 it was almost 1,65,619 crores, and it peaked out in 3,43,938 crores in March 2019, and it dipped to 3,19,090 crores in March 2020. That is because of this huge corona crash. It happened around March. So their AUM dropped from 3,43,000 crores to 3,19,000 crores. And if you have a look at actively managed equity oriented AUM, so it was 62,941 crores in March 2016, and in March 2019 it was 1,64,263 crores. Look at the growth. And then it fall to 1,20,050 crores in March 2020. That's also because of the corona crash. And then if we are having a look at their systematic transaction, it was 485 crores in March 2016, and it increased to 1182 crores in March 2019, and then it dipped to 1130 crores in March 2020. And if you are having a look at their live individual accounts, it increased from 55.5 lakh individual accounts to 93.4 lakh individual accounts. So they are doing a good job in that category. And then if you are having a look at the segment wise distribution from debt to liquid to equity from business HDFC mutual fund versus industry. So if you are having a look at quarterly average AUM, the HDFC mutual fund, they had equity almost 39.1%, but the industry is 37.5%. So since even though it dropped from almost 45-50% to 39%, but still they are doing better than the industry. So the industry is almost 37.5% equity, and HDFC mutual fund in September 2020 it was 39.1%. And in the closing AUM, it is the equity is almost 40.5% and the industry is 38.9%. In June 2020 it was 37%, the HDFC mutual fund, and the industry 36.6%. In September 2019 it was 43.1%, and in September 2019 it was 43.1% equity for HDFC mutual fund, and the industry is 39.1%. So they always overperformed the industry. Currently it is losing steam. So if you're having a look at closing AUM, it's also the same. It was about 45.1% in September 2019 and 42.5% the industry. So even though they started regaining their equity percentages, but still they are not at their peak levels. If you're having a look at their quarter over quarter, so in quarter 2 financial 2019 they had around 50.7% equity, but currently 39.1%. so it dropped from 50% equity to almost 38.3% in quarter 4 financial 2020, and then again it increased to 39.1%. so I think it bottomed out because of this corona crisis. It reduced from 50.7% to 38.3%, and then I think it's almost bottomed out, and then in the future it will start to increase. So then let's have a look at their distribution network. So among the total AUM, so they have 47.4% is directly sourced, and almost 10% from banks, and 24.8% from mutual fund distributors, and 17.8% from national distributors. But then if you are having a look at equity oriented AUM, only 19.5% is directly sourced, 24.4% is from national distributors, 41.2% is mutual fund distributors, and 14.9% from banks. So still only 19.5% is sourced directly for the equity oriented mutual funds. And if we are having a look at the June 2020 quarter, it's 49% direct, and in equity oriented it's 19.3% direct. So no significant change between quarter over quarter. But the equity oriented AUM, they are doing less directly sourced funds, so they need to pay commissions for these. And also equity oriented mutual funds are the best profitability schemes, and for that they have to provide commissions to the distributor. If you are having a look at distribution mix on AUM basis over the quarters, so the directly sourced increased from 34.5% to 47.4%. so it's in the total. So they are directly sourced is increased in quarter over quarter. In quarter 2 financial 19 it's almost 34.5%, but currently it's almost 47.4%. so they are increasing their directly sourced. And then in quarter 2 financial 2021, 24.8% is individual financial advisors, and then the national distributor 17.8%, and banks excluding HDFC banks 4.6%, and HDFC banks 5.4%. so they are doing good. They are increasing their directly sourced funds so that they don't have to pay much commissions to the distributors. That's a good thing. And then if you're having a look at their offices or branches, so they have 43 in north, 71 in west, and 52 in east, and 54 in south. And their number of distribution partners is increased from 55,000 plus in March 2016 to almost 70,000 plus distribution partners in March 2020. so it's increasing. It's good to see. And also the branches, if you look at March 2016, it's 144. so 55 of them in top 30 cities, and 89 of them in beyond the top 30 cities in India. And it increased from 144 to 221 in March 2020, 76 in top 30 cities, and 145 in beyond the top 30 cities in India. So they are expanding their branches. So their branches is not to serve only the customers, because even they can source it online, so they don't have to have their branches, but they say their branches is to service their partners, so they can answer the questions of the partners, and they can say answers to their questions, and they solve their problems. So these branches will also help partners, not only the customers but also their distribution partners. It will help them, the individual financial advisors, if they have some questions, they can go to the branches and they can and get answers for their questions. If we are having a look at the individual assets, so if you have a look at the unique investors of HDFC AMC versus mutual fund industry, so it's almost 20 million unique investors in September 2019, and 5.5 million of them are in HDFC mutual fund. So they had around 28% market share. And in June 2020, so it is 21.1 million for the industry and 5.6 for HDFC. It reduced to 26%. And September 2020, it's 21.3 million for mutual fund industry and 5.5 is for HDFC. So HDFC is losing bit of the market share, so it did decrease from 28% to 26%, but still they have 26%, the lion's share of the industry. So they are the leading AMC in the industry. So then if you have a look at their individual assets market share, in September 2019, HDFC mutual fund had 15.6% and it reduced to 14.6% in June 2020, and it further reduced to 14.1% in September 2020. So as I said, their market share is decreasing. They have to look into that. So they already said that in their conference call, they are looking into why their market share is decreasing. It's mainly because of the performance. So some of their schemes are not performing up to the level as per expectations. So they are already working on that. They hired 2 other fund managers and they are diversifying their investment styles, and they are looking into how they can solve these problems in the future. So they are already working on that. So I think hopefully in the next quarters they can fix that, and hopefully they can start to gain market share again. But currently they are losing market share. They reduced from 15.6% to almost 14.1%. And if you look at the ICICI Prudential Mutual Fund, it is also 13.6% to 13.1%. It also reduced. And if you look at the SBI Mutual Fund, they gained huge market share from 10.4% to 12.2%. And then ABSL Mutual Fund, Aditya Birla Sun Life Mutual Fund, and they also decreased from 8.7% to 7.7%. And Nippon Life, they also decreased from 7.8% to 6.8%. So I see the trend is from private mutual fund people to the government owned SBI mutual fund. That's what I see the trend, because of the risk awareness. But still they are losing the market share. They have to fix it as soon as possible to regain their market share. So let's have a look at the number of live individual accounts. So it reduced from 9.39 million accounts to 9.21 million accounts in September 2020. So it with a reduction of 2%. And if you look at the individual monthly average AUM percentage of total, it also decreased 6%. If you look at the individual shares, it reduced from 57% in September 2019 to 55.2% in September 2020, but the industry has only 52%. So they are still doing better than the industry. And then if you are having a look at individual share in AUM over the years, so in March 2016 it was 52.8%, and in March 2019 it's almost 63%. Currently it's almost 57.2%, because I think because of the crisis some people did some redemptions, so it reduced, but still they are doing better. So why are we looking into the individual people? Because they tend to invest more in equity side and it is more profitable. That's why we are looking into how the individual assets or the individuals people's assets is important in the AUM. Let's have a look at the systematic transactions. So if you look at the inflows to the systematic transactions, so it was 3.1 billion rupees in March 2014, and it increased to 12.8 billion rupees in September 2019, and it now reduced to 9 billion rupees in September 2020. And if you look at the number of transactions, it's 1.23 million systematic transaction in March 2014, and it increased to 2.98 million transaction in September 2020. And also if you have a look at the long tenure SAP book, so over 5 years, 83% of their book is over 5 years and 71% is over 10 years. The SAP AM, they have around 454 billion. So they have strong and stable order book to provide predictable flows, but it is decreasing. But we have to see, is it only for HDFC AMC and also to the industry? So then let's have a look at the industry versus HDFC AMC. So it increased from 4,300 crores. It topped out at 8,600 crores. It again reduced to 7,800 crores. But if you have a look at HDFC AMC, from 485 crores, it increased to 1,280 crores. But then again, it reduced to 900 crores. So it's following the trend of the mutual fund industry. So it is much severe than the industry, but still it follows the trend of the industry. So they have to do something better to regain the market share. But yeah, it follows the industry, and recent panic it happened. So that's why the systematic transactions are reducing. And then if you are having a look at top 30 and beyond 30 cities, so the percentage of AUM by geography, so top 5 cities almost has 69.12% of AUM, and the next 10 cities 14.74%, next 20 cities 5.5%, and next 75 cities 7.02%, others is just 3.58%. So if you have a look at total monthly average AUM by top 30 and beyond 30 cities, so the top 30 contributes almost 85.8% and beyond 30 is 14.2%. But if you have a look at the players in beyond 30 markets, so they're the second player in beyond 30 markets. So because SBI mutual fund, they hold around 20.7%, they are the leader in that segment, and then HDFC mutual fund 11.7%, and HDFC Prudential 11.2%, and ABSL 8.7%, and then UTA mutual fund 8.6%. So they serve customers across 98% of all pin codes in India. They have a network of 223 branches with 146 in beyond 30 cities. So they are doing good with top 30 and beyond 30 cities. And then let's have a look at the digital initiatives, because now it is increasingly important to keep up with the electronic transactions. So they have HDFC mutual fund online investors, they have a portal for investors, and then for common people, like for everybody, they can, for partners and investors, they have transaction board and WhatsApp for investors, and for partners also, especially they have HDFC mutual fund online partners and dedicated agent techs. So they are also doing WhatsApp for investors for easy transaction statements and board. They try to do innovate some things, and they also have HDFCfund.com. They also put videos to help investors and partners in their digital journey, and they also have some of the internal employees to create transaction on behalf of partners, and they are also trying to do some end-to-end solutions, EcoIC, onboard, transact and interact. So they also try to do EOTM, and they try to do different things of digital initiatives. It's good, they try to do digital initiatives to keep up with the trend. And then let's have a look at their electronic versus physical transaction over years. In financial 2015, only 30% is electronic, 70% is almost physical transactions. And then if you look at financial 2019, the electronic transaction increased to 67%, and then financial 2020 hit 69%, only 31% is physical. And financial 2021 current year to date, the electronic transaction increased to 87%. It's of course because of the lockdown, people cannot do much of physical transaction, but increased to 87% electronic transaction and only 13% physical transaction. So they are doing good in this category as well. Let's have a look at their financials. So how are their financials panning out? So they have a sales of 1490 crores in March 2016, and it increased to almost 2124 crores in March 2020. And if you have a look at their net profit, it increased from 478 crores in March 2016 to almost 1262 crores in March 2020. So their dividend payout is also same, almost 50% they are providing as dividend. So that's almost good. And then if you are having a look at revenue from operations, so during 5 years in financial 2015 to 16, their revenue is increased from 1443 crores to almost 2000 crores, so with a CAGR of 14.4%. And their operating profit increased from 656 crores to 1513 crores, it increased to a CAGR of 21.1%. So the profit before tax, it increased from 708 crores to 1653 crores with a CAGR of 21.57%. So the profit after tax, it increased from 478 crores to 1262 crores with a CAGR of 25%. So they are doing very good. And if you are having a look at the dividend, it increased from 16 rupees in financial 2018, 24 rupees in financial 2019, and 28 rupees in financial 2020. So they are doing good by providing dividends to the shareholders. So they care about shareholders. And also if you look at the return on equity, it reduced from 42.1% to 35.6%, but still it is a very good return on equity. So it's almost 35.6%. That's very good. And then if you look at the dividend per share, as I said, it increased from 16 rupees to 28 rupees. That's very good sign. Then if you're having a look at the balance sheet, so the total asset increased from 1423 crores to almost 4309 crores, and they have a reserves of 3923 crores. So they have no debts. So all of their 4300 crores, almost 4000 crores, it's just their investments. And you know what, they also get returns from this investment. So if you just account for 5% return, so from 4,000 crores, they almost get 200 crores every year as other income. So that's also going to grow. So that's very good for any company. So they also have a very healthy financials, and they are also doing very good, and their industry for the next decade is going to perform very well. So it's all very good, I see, for this company, and it is a market leader in the industry. And then if you have a look at their total investments, so they have around, as I said, 4,000 crores they have as an investment. So if you break down their total investments, almost 84% that's in mutual funds. So out of that, they hold around 81.3% in liquid and debt, and 18.2% in arbitrage, and 0.5% equity. And they also have debentures and tax-free bonds 14.5%, and other equity alternative funds 1.5%. So they also manage their own 4,000 crores, which will also going to give revenue add up to their actual business revenue. That's very, very good for the company. Let's have a look at their shareholding pattern. So almost promoter holds 73.9%, which is very healthy, and the public hold around 15.5%, and then FII they hold around 8.8%. So if you look at the historical promoter holding, it reduced from 82.8% to 73.9%, because this is because of the regulatory requirement to go down below 75%. So they reduced their shares. So that's okay, that's a good thing. And then if you look at the historical FII holding, it increased from 3.8% in September 2018 to 10.7% in June 2020. So currently it's 8.8% in September 2020. That's a very good thing. FIIs are buying. And if you ever look at the historical mutual fund holding in HDFC AMC, so it's 1% in September 2018, and it increased to 2% June 2020. Currently it is at 1.4% in September 2020. That's also a very good thing. So even mutual funds are buying. They don't have much, but still they are buying. But then let's have a look at the valuation part. So this is the price chart. So they peaked almost at 4,000 rupees. They went up to 4,000 rupees around December 2019, and it dropped down to almost 2,100 rupees, and currently it is going sideways. So if you have to do some kind of technical analysis, so it went up, and then it has a correction, and it is 2,100 seems to be a very nice support, because you see it bounced here, and it also bounced this point. So it's a very support. They have a support at 2,100 rupees. Currently the price is almost 2,400 rupees. So you don't have much downside, I would say. Let's have a look at their financials and the projections of the future 3 years. So then in financial 2016, they have a revenue of 1,490 crores, and financial 2017 is 1,568 crores, and financial 2018 is 1,870 crores. In financial 2020 it's 2,124 crores, and I am projecting the revenue to be 1,912 crores, and the reduction for 10%. And the financial 2022 it's 2,103 crores, and financial 2023 2,418 crores, with the revenue growth of minus 10% for 2021, and 10% growth for 2022, and 15% growth for 2023. And if you look at the net profit, it was 478 crores in financial 2016, and increased to 1,262 crores in financial 2020. I am estimating it to be 1,300 crores for 2021, 1,430 crores for 2022, 1,644 crores for 2023. So I estimated conservatively. So the net profit growth is 3% for 2021, 10% for 2022, and 15% for 2023. So if we calculate the price target with the current valuation, which is a P of 42, so the 1 year target would be 2,563 rupees, and 2 year would be 2,819 rupees, and 3 years would be 3,242 rupees, with the price cumulative growth of 6% for 1 year, 16% for 2 year, and 34% for 3 year. But then the P is 42. It's it might seem expensive, but it's a very good company, and they don't need much of capital to scale up, and they are the market leader in the industry, and they have 50% dividend payout. So it's a very good company, and usually these kind of AMC companies have almost 40 PAs. If you get it for 30, it's very good. But then I am estimating the price target with a PE of 45. So for 1 year it's 2,746 rupees, for 2 year it's 3,021 rupees, and for 3 year 3,474 rupees, with the price cumulative growth of 13% for 1 year, 25% for 2 year, 43% for 3 year. But then of course the PE can shoot if there is an euphoria in the market and a lot of people want to buy, then the shares prices can shoot up, and it can go to, even at one point of time it was trading at around PE of 65 PE. So it almost reached 4,000 rupees initially at almost in December 2019. So it's possible it can go much higher than the price target as well. But I would say the limitation to the downside is limited, I would say. Yeah, unless something big happens, it will not go below 2000. If you get at 2000 rupees at some volatility at some point of time, that would be very great. So currently I would say it is not undervalued, it is not overvalued, it's just about at the right price, the current valuation. So if you want to do some kind of long-term investment for the next 5-10 years or 15 years, this is going to do very well in the next 10 years, because it has a huge growth ahead. Even for the mutual fund industry as a whole, I'm very bullish on the mutual fund industry. And HDFC being the market leader, they have a very good banks like HDFC Bank. They have HDFC. They also do life insurance business. Everything is they are doing very good. So I would say the HDFC AMC, they are also going to do very well in the next 10 years. So this is not my financial advice. This is my personal opinion. So you have to do your due diligence before investing in any stock. So that's it for today. Thank you for watching. If you like this video, like, share and comment. Please subscribe to my channel as well. And if you want to analyze some other companies, please let me know in the comments. That's all. Thank you for watching and have a nice day. Bye bye.